How to reduce taxes for businesses in Bali?
Well, that's a good question. It's a very good question. And we also talk about this constantly. First, there are two types. Operations probably. You will probably say again that this is boring, but there are two types of operations and I want to talk about that. The first is income, the second is expenses. Accordingly, it is very easy to reduce expenses on income operations. For example, if your current rate is 0.5%, after 3 years you open a new company and again pay 0.5%. Or if you have an import-export company and you are handling quite a large capital through your company. Well, I don't know, $500,000 a month. You make an agency agreement with the companies you collaborate with. Based on this agency agreement, which we have discussed, you specify the actual amount of profit for your company. And not the entire payment that came to your company is considered profit, but only a portion, for example 5% of this agreement. Thus, you can further reduce your expenses, meaning your taxes only on incoming money. Optimize. In terms of cash outflows, I generally tell everyone that outgoing operations should be taxed at a rate of 2 to 3%, no more. This means that all operations related to the payment of foreign services need to be excluded because that adds 20% on top, plus 11, 31%. Salaries and payments for employees who work abroad are definitely official and should be excluded. The payment for rent, because it is expensive, is 10% of the payment amount. That is, to leave only something related to these payments of 2-3%. These are usually some local contractors. These are usually some services, and they are often even in-house employees who receive a small salary. Yes, that's absolutely correct indeed. Regarding salaries, there is one more point. I will probably conclude on this, as optimization can be very lengthy.
Yes, infinite.
Regarding salaries, it should not be forgotten that you, as founders, have the opportunity to pay yourselves salaries because you also hold certain positions in the company. Accordingly, you do not pay any taxes on amounts up to $300. Therefore, by default, $300 should be received tax-free. Your second founder too. Next. You can grow this amount to approximately around $1,000 and it will still be 7%. Compared to dividend payments, this saves you an additional 3 to 4%. Dividends are paid with a 10% tax.
Payments are subject to a 10% tax.
If you have a tax number, yes. That is, if you have a quitas, you pay 10% dividends on the tax number if you have a company. But if you don't have a quitas, there is no tax number, and you pay 20% on dividends.
As a physicist, correctly.
As for physics, it's just general mathematics.
All right. From this question, another one arises. Is it possible to create a campaign here in such a way that the money coming into this campaign could then be smoothly transferred to Europe, to Austria, to Switzerland, and that with this money, it would be possible to officially purchase real estate?
Well, first of all, I don't see any problems with an Indonesian company, in principle, acquiring real estate abroad. That is, no one restricts it in this regard. Therefore, I see no limitations in this.
So, as the director of an Indonesian company, I come to Austria or Switzerland or Germany and I say, I want to buy this house. They tell me, well, the cost is essentially this, so the agreement is basically this, the money is coming in. How? What loss?
Well, everything will be a little different. You outlined the perfect structure. Of course, yes, they will ask questions about what kind of company it is, provide a ton of documents about this company, meaning a clear package is needed, prepare in general approximately how much money you will spend on this. This is an expense operation for the acquisition of assets on the company's balance sheet, which means it does not incur any expenses. Well, that is, everything is very simple. These are simply expenses based on which you acquire real estate. Moreover, if you are the owner of the property, then, in principle, you have all the documents as an individual, and you can transfer this property here to an Indonesian company and register it on the balance sheet of the Indonesian company. I wouldn't say that we have much experience in this particular matter, because mostly European clients tend to focus on optimizing their expenses from there, sending a bunch of receipts for things they have paid for, like rent, buying a bike, or anything else in order to account for all of this here and accordingly deduct taxes here. In that way.